Good afternoon, everybody. Hello there. Welcome, traders. I hope that you can hear me. I hope that you can see me as we are here for session 52 of our price action trading guide and our final session as we talk about how to use monthly charts with price action. As I said, it's great to have you here. I hope that you can hear me, hope that you can see me. If you can do, if you just let us know in the chat box, that would be fabulous. Okay, we just want to make sure that the tech works as always. Great to have you here for our session. As I always appreciate, we have a truly global audience who join us from all over the world. Okay, you're very welcome here wherever you are. I hope you're well, and I hope that the markets have been treating you well in these volatile periods we find ourselves. And equally, I appreciate we have a wide range of experience for people who join us. Okay, from complete beginners to very experienced traders. You're all very welcome. There's all something here to take away for yourselves. Okay, so in terms of what we're going to talk about today, we're going to be talking about actually utilizing monthly charts in alignment with the price action elements that we've talked about and covered through the previous sessions that we have discussed. Now, quite often, as soon as people hear the word monthly charts, they can be maybe a little bit intimidated or a little bit overwhelmed by what they may be seeing or thinking. But what I'm hopefully going to do today is share with you an idea that you can how you can utilize those monthly charts to help you with your sort of lower time frame entries. So remember, here you go. Remember, here we are, Admirals, a Forex and CFD broker, licensed and regulated across a wide range of regulatory environments, providing competitive spreads on the most popular trading products, allowing you to engage with markets, utilizing both the MT4 and MT5 platforms. If you have any questions about Admirals, please get in touch with your account representative, and they'll be very happy to help guide you. So what are we going to talk about today? We'll talk about price action trading in the series in general, but of course we're going to focus on, what can monthly charts tell us? How can we utilize them? How do we incorporate it into our trading plan? And what are the kind of setups that we should be looking for? And then we'll have a little look at live markets. It would be useful and interesting to know, of those of you joining us here today for the live session, how many of you actively look at and engage with the monthly charts, okay, in terms of your trading. Maybe it's just something that you just don't utilize because you think it's just too big a time frame. Maybe it's just you've never really known how to. Maybe you're just not really unsure how to. And in which case, you can take a look at, you want to sort of learn more about it. As I said, it would be useful to know, of those of you here today, how many of you have any, if any at all, engagement with monthly charts. William says, good day from Belgium. Hello, William. Hello, Sam. How are everyone there? We've got a good turnout there, okay? William says, sometimes I look at it, but not often. Okay, that's fantastic. That's great. I appreciate that. Appreciate your openness there, William, okay? Hopefully by the end of this session, you might have a little bit of a hint of a way that you can utilize it and incorporate it into your own trading plan. But we'll talk more about that in a few slides time. For those of you who don't know me, my name's Paul. I've traded for many years, okay? Traded for funds, traded for clients. Primarily, I look to trade at FX indices and commodities. That's where I focus my own time and energy. I tend to be a trend trader for my sort of swing and position trades, and a sort of a reversal trader for my shorter intraday trader. So, of course, this is more about the sort of swing and position trades and how I would utilize that. But I'll be sharing some of my own particular knowledge and experience about how that can work for you all. So today, here we are, it's the price action guide, and it's actually what we're going to be doing is we're going to be finalizing our series here today, which has been all about based on helping traders understand and utilize price action in their own trading. And the whole idea behind the series was that it was easy sometimes for beginner traders to be intimidated by the amount of knowledge required to be able to analyze markets. However, what I've tried to get across in this series is that with a bit of education, a little bit of understanding of how candlesticks are formed and what they tell you, then it becomes easier to analyze and understand markets. So each of these Wednesday series, what we have done is we've built upon the previous sessions so that you've been educated and informed on how to use price action in your trading. And as I said, we're drawing this series to a close today, and we hope that that you have found the series useful. If you've got any questions or comments or feedback or etc., you're more than welcome to put them in the chat box, or you will find there will be a feedback form at the end of the session. It'd be great if you could just put your own comments and thoughts in there as well. So, as I said, we've covered an awful lot in our sessions, and I had tried to sort of get across to everybody that we were covering a mixture of sort of hard skills and soft skills. The hard skills are the ones that everybody loves. Okay, things like trade setups, like engulfing candles, star formations, pin bars, etc., inside bars, the kind of hard skills. But what I also wanted to do is to get across some of the soft skills that when you're at the start of your trading journey, you might not necessarily recognize their value, but the longer and the deeper you go into your journey, the more you realize how important they really are. So things like having a trading plan, being able to manage your trades, do your risk management, utilizing checklists, etc. All of those elements, okay, that together, the hard skills and the soft skills will help you be the very best trader that you possibly can be. And the good thing about it is that invariably all of these sessions have been recorded and they are on the Admirals YouTube channel. So if you've missed a couple of sessions, or perhaps you need to go over some of the concepts again, you'll find them all there on the Admirals YouTube channel. By all means, please make use of them and enjoy all of them. Opera says, I want to see all of these webinars. Please help me to see these webinars. As I said, you will find them on the Admirals YouTube channel. So if you go into YouTube, if you put in even sort of my name, Paul Wallace, or Admirals, the same thing, what you'll see is it'll take you to the Admirals YouTube channel. And in there, under Trading Spotlight, you will find that there is the whole range, okay, of the price action trading series. So by all means, make sure that you can access them and use them. You'll find them very, very helpful. Okay, and as I said, there's an awful lot we've covered over these 52 sessions. Okay, over the last year or so. So I think it's been there's some great stuff there that hopefully will help you as a trader and basically develop as a trader and become the best trader you possibly can be, which was my particular aim for this. Okay, so it's a good starting block. Okay, as I've said all the time, all the way through, namely that whilst your trading journey will probably take you off in many different directions, it is really, really useful to have a good, solid understanding of price action. And, we think of it like learning a new language. Okay, when you learn a new language at the start, it can be a little bit challenging. It can sometimes be a bit clunky. It can be a bit difficult. However, the more you practice it, the quicker you become proficient in it. It's the same with price action. Okay, at first it might seem a little bit overwhelming, or it might seem a little bit, there's lots going on there. But actually, the more you practice it, doing your analysis, okay, the more you learn the concepts and the patterns we've talked about during this series, that the quicker it will start to click into as a way for you to be able to analyze the market and be able to sort of find triggers and particular entries and manage your trades. Okay, so it is, as I said, it's a great starting block for any good trader to be able to build from in your own trading careers. So what I tried to do is I tried to sort of boil this down into like 10 steps that you can follow as a trader. Okay, just not perfection, because there is no perfection in trading, but if you're doing these 10 steps, well, then invariably what it means is that you're doing the right thing time after time after time. Okay, and that's what we wanted for you to be able to sort of do that, take that on board. And so what we had was step one: define levels of support and resistance. Whenever you open a chart, whether it's Bitcoin, whether it's euro dollar, whether it's gold, whatever, first thing you do, define levels of support and resistance. Start at the monthly, go down to the weekly, down to the daily, draw in significant levels of support and resistance. What you can also add to that is if there are other things like big round numbers, big psychological numbers. So Russell, was $2,000, all right? The gold itself earlier in the year, $2,000. Okay, you'll see big round numbers that markets will respond to. Make sure you're just drawing them in. So what we're trying to do is to define step two: if there is a trend. You've heard me say all the way through this, a good trend should leap off the charts at you. You don't need to force it. You don't need to push it. If you are forcing and pushing it, it probably isn't there. Okay. The challenge you have is that markets only trend 20 to 30% of the time. But if they do, well, we're interested at the starting stage of your trading career, because actually what we want to be able to do is, in an uptrend, you want ideas, be able to sort of buy at pullbacks, okay, in an uptrend. In the same way, you want to be able to sort of sell at resistance on a rally in a downtrend. And so it's actually step 3 is looking to see how does price react at those key particular levels. Because what we're looking for is at step 4, look for some price action triggers at those significant levels that give us an opportunity to enter the market. So those price action triggers, things like pin bars, engulfing candles, key reversals, star formations, inside bars, etc. These are the triggers that allow you to sort of join that trend if it's feasible. But step 5 was always about, is it part of a bigger chart pattern? Take a step back. Okay. Sometimes new traders, they get just a little bit too focused. Okay. So they learn about a pin bar and then they just want to trade every single pin bar that they see on the chart. But actually what it is about the context, okay, that within which that trigger appears. And sometimes you just need to just step back and see, is it part of a bigger chart pattern? Maybe it's a big flag pattern in an uptrend. Maybe it's a double top or a double bottom at the end of a downtrend. Okay, you just want to step back and just be aware of that. Then we got on to the back 5. Okay, the 5 I talk about, the 5 R's. Step 6, risk. Okay, accept it, manage it. You never trade without a stop loss. You never risk more than a small portion of your capital on any one trade. That's what you do day in, day out on every single trade you do. Step 7 is about rewards. Okay, are you going to have a target that your trade goes to, or are you going to trail? Okay, trail your stop. Decide before it. Okay, pick which is the one that works best for you. Neither's perfect, but which one works for you. Step 8 is all about records. Okay, you've heard me go on all the way through this thing about keeping great records. Okay, because if you are keeping great records, like a spreadsheet, a trade journal, your equity curve, it allows you to do step 9, which is to review. You review your trade every day, every week, every month, every quarter, in order to improve your trading. And as you start to do that and build up data, well, then you're in a position to do step 10, which is to repeat. Consistency and discipline are key. It's hard to be one without the other. What you're looking to do is, if you're keeping good records and reviewing that, well, then what you're in a position to is to start to identify which are the trade setups that actually resonate with you, which actually work with you, and which are the trade setups which are sloppy, impulsive, off-plan trades, okay, that you can need to start to eradicate and cut out. Because as you start to do that, well, then you're doing the right things to help yourself try and build a decent trading business. So, as I said, those are 10 steps you can follow, okay, as a new trader. It's a building block. It's a starting point. Okay. All right. It's not, won't cover everything. It's not perfect. But if you're doing these 10 steps, well, then at least you're doing the right things. Okay. Day in, day out, and allowing you the opportunity to acquire the skills and experience to go further in your trading journey. So, that's our standard introduction. But as I said, we're here to talk about the monthly chart, aren't we? So I think 1 or 2 of you put in that you might look at the monthly chart when it comes to your trading. What you very often find, okay, from my own experience of, working on trading floors, trading in funds, coaching thousands of traders, is that, everybody has everyone has very different lives, but you see that quite often the challenges and obstacles are very much similar, all right? And so what I find is that there's lots of new traders who would love to be able to trade full time, but the reality is that they're not able to, okay, because maybe they have a work, okay, maybe they have a job they have to go to, maybe they're running businesses, maybe they have a family they're trying to raise, maybe they're going through college, maybe they're caring for parents, okay. So many people might want to trade full time, but the reality is that it's not really feasible. And so what happens is trading gets condensed into windows of time. Maybe it's a window at the weekend, or it's the window at the start of the day, or at the end of the day. But it becomes small windows that the trader can fit in terms around their existing lifestyle commitments, and that's that's absolutely fine. Okay, that's absolutely fine, ladies and gentlemen. Okay, we're here to see that as you're learning, as you're in a position where you're trading to learn, well, invariably that is an opportunity for you to be able to do that around your other existing lifestyle commitments. That's absolutely fine. So then you have to see, well, I need to want to find a way. How can I utilize that? How can I utilize the time I have to be able to engage with markets and to trade? If you're not in a position like like myself, who's a full-time trader who can sit at charts all day and manage trades, how do you make it work for you? And so this is where the longer time frames and monthly charts might come in and might be of some assistance to you. So how do we solve this? As it said, one of the ideal opportunities lies with using monthly charts, because that means that you can do your analysis in a couple of hours at the start of the month. So, I'm here talking to you on the 4th of October. Sunday was the 1st of October here. So at the end of last week, we had not only the end of the week, but we had the end of the month and also the end of the quarter. So I had a weekend to basically analyze all of the data from the last quarter, but also look at what was happening, okay, and likely to happen in the month ahead, okay. And what that allows me to do is to focus my work on finding one or two trades that work for me. Now, the reality is that if you're using monthly charts, you might actually only find like one trade, okay, utilizing the monthly chart. But actually, for some people, let's say longer term, low frequency traders or investors, then that's absolutely fine. That's absolutely fine, because what they can do is that they can place the trade as required and just leave the trade till it plays out. And either that will play out at in a couple of weeks, might even be a couple of months, depending upon the way that works. And we'll talk more about that in a particular moment. What it also allows people to do is to do what I would call set and forget trading. Okay, namely that once you've identified your position, identified your entry, your stop loss, and your target, well, then that allows you to basically almost put the trade on and just let it play out. Which actually, for many traders, that actually is useful and good for them, because actually it's very often once that trade is on, people have a need to interfere, okay? Okay, and more often than not, that doesn't really help you. As a trader. But at the other end, what it actually also can do is, once you've done your analysis on the monthly chart, well, then an active trader, okay, somebody who has a little bit of time, okay, well, then what you can do is you can search for and hunt for entries on the lower time frames, and that's what we're going to talk a little bit about today. Talk about how you can do your analysis, but then also just look at, well, what can I do to be a bit more of an active trader on those lower time frames that could actually help me in terms of using my analysis and finding trades to work with. So, so how do we look to use the monthly chart? How can I utilize the skills, okay, and the concepts, okay, and the patterns that I've learned on Paul's price action trading guide here? How could we utilize that on a monthly chart? Well, my preference here, let's just bring up the old drawing tools. Well, my preference is that in an ideal world, I would be looking normally for kind of small candles that give me the idea of a possible reversal or a possible move, okay, where that could be the kind of like an end of a pullback or the reversal of a trend. And there we can look at just a lot of the very simple standard price action setups that we will have talked about in the past. So things like the key reversal pattern, the engulfing candle. You'll probably see the pin bar and the inside bar. The engulfing candle, key reversal, okay? But this particular one here is a very big candle here that this was actually Bosch. I think that was on euro sterling, if I remember rightly. And what that was that having price rallied up to a significant level, it then pushed to a new high before rolling over and falling away and closing beneath the low of the previous candle. These which were inside bars themselves of this pin bar here. So you've got a price action combination there. You've got a key reversal there at a particular level. Now, of course, as I was saying, when you see that kind of a big candle like that, that is a significantly big candle. And actually, in terms of your trade management, in terms of where you would look to enter and where your stop loss, well, in terms of your trade risk, that might be a little bit overwhelming. That might be a little bit too big, especially if you've been used to trading, let's say, 15-minute charts on an intraday basis, where you may have had a 20 to 25 pip stop, to going here where you might have a 250, 350 pip stop. Some people might look at that and get a little bit overwhelmed, a little bit intimidated, a little bit look at that and think, well, hang on a minute, that's just a bit too. It's relative in terms of when doing proper position sizing, which we've covered in previous sessions, and start to think of your trades in terms of units of risk. All right, in terms of the difference between your entry and your stop loss being it is a unit of risk. Okay, and that's what we're actually looking to work with. Once you start to break that down, and you start to look at maybe lower entries, well, then this is what actually gives you the opportunity to basically actively trade off monthly charts when when actually sort of just but looking to engage them on those lower time frames of things like the weekly, the daily, and perhaps even the 4-hourly chart, based upon your ability to be there for every 4-hour candle close. But what you will see is that, as I said, is that things like key reversals, engulfing candles, pin bars, and inside bars, they in particular are very, very useful to see. Okay, they are very, good things to be able to work with. Even like here, okay, just that's just there's pin bars there. Okay, this is big even engulfing candle. This is just that was an inside bar. All sorts of elements that are going on there that you can actually just look at and utilize. And we're going to have a little look at a little bit more in depth here. So let's just move these here so you can hopefully see here. So bang, let's bring up this drawing tool here. So this is a monthly chart of the Australian dollar against the Japanese yen. And hopefully you can see that actually for the last few years, that has actually been in a nice trend. Just remember, no trend moves in a straight line. It always basically zigzags, okay? But what we want to be able to see is, is it actually just making higher highs, higher lows as it goes? And what I want to be interested in is earlier this year, okay? Early this year, back here to the 20-period moving average. We'd the previous month, okay, I think that was into March, we'd had a very a bearish candle, but one which had closed still closed above the 20. It still really couldn't close. And then what actually happened is the next month, okay, what we created there was a small inside bar, which was also a pin bar, was also a rejection candle, was also a bullish candle. And so, of course, when I see that, as I said, my preference is that I'm just looking for small candles, inside bars, pin bars, the combinations between them. I find really useful in terms of actually as a trade idea, because what I'm able to do is to start to look at, well, actually, as a position trader, well, I can actually sort of look to be able to sort of give myself an idea of, I know what the likely bias is for this next month in terms of it's more likely to be a bullish move to the next month. It's a small bullish inside bar. Remember, an inside bar is it's the rest before the surge. Markets are like human beings. We surge, we rest, we surge again. And that's what we're seeing here. A surge, we've had a surge, a rest, and what we're waiting for is the next surge, and that's what we're trying to position ourselves. And as I said, this is a monthly chart, but this, to be fair, this could be a 5-minute chart, it could be an hourly chart. Price is fractal in that sense, that the pattern and the way price moves just repeats itself on all multiple levels throughout throughout time. But here I am particularly interested. Okay, once that candle is completed, I'm starting to be interested to say, well, I'm a trader. Now I need to look at, well, on the lower time frames, how can I do that? How can I turn that into, into a trade idea that works? So, what I, was able to do is to go down onto the daily chart. Okay, a daily chart. Now, if you can mentally remember, in the month when we looked in March, okay, on the monthly chart we had a candle which basically started here, pushed up a bit, came all the way down, but actually it closed. Okay, bang, it closed, here. Okay, that's where it closed. You know, this was the low of it, this was the high of it, this is where we opened. Okay, and this is where we closed. We had, you know, as I said, it's quite a big candle, but we can see the last few days of that month of March, there was a little bit of a retrace there. Remember what I said is that the next month created Bosch an inside bar pin bar. And what I've done is I've just grayed out that month. That was the whole month of April earlier this year, and you can just see the price action there. It's price is doing its thing. Okay, it's swinging back and forth. What I am interested in though is we have a low here, then we have a higher low. Okay, then we've had a higher high. Here we have a higher high. Here we have a higher low. Okay, so this is just this is confirming my monthly chart. Okay, the monthly chart gave me an bullish inside bar pin bar. Okay, so I'm already, you know, have a bias to the long. And when I look at the daily chart, well, what I can see is that that is confirming that I'm getting higher highs, higher lows. Okay, we are leaning to the upside. And what we see is at the start of May, is we get a breakout there. Okay, the first day of May, in fact, we break out of that and break above the high. Now, some people are breakout traders and love to trade a breakout. Okay, and they would have basically been buying that. Okay, buying long there with their stop probably beneath these lows, recent lows, and that's absolutely fine. If you're a breakout trader, that can be a way to operate. And I personally am a pullback kind of guy. I know that about myself. And so what I'd seen is once price popped up, okay, and put in a pin bar, what happened is we fell back down here. And here we've had the 20 on the daily chart. The 20 has now crossed the 50. And what I have there I have that for me, okay, was my trigger, because that is actually, I know I've got a long bias. I know I want to be a buyer. Price has broken out and come back in. And what we have got here is invariably this all the way here. That is now a bullish pin bar. Okay, that is a nice bullish pin bar that gives me an opportunity to get into this trade, but also a very clear level where I'm wrong. If prices picked up and then fallen away, well, then I know where I'm wrong very, very quickly. And I personally prefer that. But this was the way of basically taking the monthly chart and then taking it down, boiling it down into a way to engage with it on the daily chart, confirming my monthly bias. And we were able to take the trade. And, you know, some people would have basically just taken the trade up to the 200 period moving average, which has acted as dynamic resistance. And even that, okay, is still a nice trade. Even that still has an asymmetric reward to risk. And if you're someone who likes to hold your positions much longer, there was the opportunity to do that. But the important thing is that you are taking the monthly chart and then breaking it down into a trade opportunity on the lower time frame for the on the daily chart. Okay, now some people might have even just broken that down onto the weekly chart. Okay, but what I want to do is to just show how a trader could basically have a bit of monthly analysis, identify where they see inside bars, pin bars, and then on the daily chart just do a little bit at a time, because you're actually only looking for that particular entry. As I said, for me, once it's broken out, I want to see a pullback, okay, and that gives me my opportunity to get in. But I do recognize some traders are, love a breakout and would have been happy to just basically trade into that above that. That's absolutely fine. That's fine. I just know what my particular trading style would be. So that was on Aussie yen. Also, a couple other examples. This is pound against yen, and we'll come back to but I have been interested here. But once again, pound against yen had been in kind of a nice uptrend, a bit like Aussie yen. All right, it's a monthly chart, and a little bit earlier in the year, what we'd had is price had actually pulled back here, and then we had a bullish monthly candle. But then, what was this candle here? This candle here, okay, this sort of the kind of March candle was it was an inside bar, but that was also a bullish candle. All right, bullish pin bar. Okay, a bullish pin bar. Some people might call it a dragonfly doji. I would still be looking at that as that is a bullish pin bar. Okay, we've got a good wick to the downside, a wick that has bounced off. Okay, the monthly 20 and 200. So I know there is support here. We've been basically making these kind of bang higher lows here, and as you can see for yourself, we fired ourselves off there. But I said just what we're looking at is that inside bar, pin bar. Remember those price action combinations, and we did a session purely on price action combinations. Okay, just a few a few weeks back. Okay, so be sure to go and look at that on the Admirals YouTube channel. But then also what I'm looking for is there on that monthly chart. This is the trade setup that we can see here. But once again, if we go down to the daily chart, all right. So remember, I was saying is the previous month, okay, February was was quite an expansive candle. But then if you're looking at here, okay, for what was the March candle, the range of the March candle was within the range of the preceding month. Okay, it was that inside bar. I remember it was kind of like a bullish pin bar, and no surprise that there's lots of wicks here. See how there's lots of bullish wicks there, lots of bullish support there at the daily 50 period moving average. This and the daily 200 was acting as kind of resistance up until the end of the month. So it's that, once again, it's that monthly picture, boiling it down to what do I see on the daily? Does the daily chart support my monthly ideas? Which it did. And once again, interestingly, this was the start of March. The next day we had a breakout. So breakout traders would have been happy to be bullish there. But once again, as I said, I like to see price breakout and then fall back a little bit. And here, bosh, what did I have there? There is where I had my daily bullish inside bar, pin bar, which is what gives you the opportunity to basically to take a trade. Okay, and that trade is much smaller trade risk in the direction. I know I've already got my bias from the monthly candle. Okay, I've got my bias. I know I want to be long, and as you can see, once that's after the first few days of the month, for the rest of the month, okay, we ran and we ran much further. And for those of you who love to hold positions, okay, then that was the opportunity. But what I'm looking for here in terms of sharing with you is how we could use that monthly analysis to basically find an entry on the lower time frame that would give us just a nice trade, maybe only for the next couple of weeks, a nice swing trade, okay, or to the kind of next level of resistance in this particular case. That is the way you can, as I said, use a monthly chart to be able to help give yourself a little bit of the bias, a little bit of an idea of the trend, okay? And then just wait and watch to take an entry on the lower time frame. And that doesn't take up too much time, doesn't take up too much effort, okay? As I said, it's just a couple of hours at the start of the month and being able to just do your overall analysis, looking for specific price action combinations, and then looking for those same price action combinations of a sort on a lower time frame as a way and means to access your trade. So this is a chart of dollar index. Okay, so dollar index. If you've heard me talk about it before, namely that if you're going to be trading FX, you have to keep on top of what's going on with the dollar, and in particular the dollar index. Why? Well, because for want of a better word, the dollar index. Okay, the dollar is it's the daddy of the FX market. Okay, something like I think about. Might be something like about 60-70% of all foreign exchange transactions trades, okay, have the dollar involved in some part through it, okay. So it is important as an FX trade that you understand, what's the dollar doing? Is the dollar asleep? Is it awake? Is it volatile? Is it angry? Okay. You just need to keep an eye on that, okay? And for lots of people, that gives them the idea to be able to trade the dollar. Now, this is a chart of the dollar, and I just need you to this is the monthly chart of the dollar index, and I just need you to keep aware of here back in sort of July, okay, just a couple of months ago, because what we'd had is for most of this year, okay, we were starting into 2023, for most of this year, we'd actually just kind of gone sideways, okay, on dollar index after a fabulous run. Okay, a fabulous run there. Okay, in 2021 to 2022, we pulled back a little bit, and now we were just going sideways. Okay, and people were wondering what's going to happen next. And then what happened is in July, we dropped and we pushed down to this big round number. Remember, I said at the start, you need to draw in levels of support and resistance and big round numbers. 100 big round number. And what we can see is basically the price way basically. Price almost, it's like a false breakout in that it went through that level, but it clawed all the way back up and kind of ended up around about the 102 level. So And you can see actually for the next couple of months what we've done. And if you're on top of your trading, you'll know that we've actually had a really strong dollar for the last few months, okay, which is, well, is a threat to some people, is an opportunity for others. But I just want you just to remember that, because what we're going to do is I'm going to switch to the Admirals platform in a moment, and we'll just see how could we use that information for our own trading. So just remember that for the moment. We're going to switch across to the charts, live charts in a moment, but I just wanted to put up that big picture of the dollar index as a way and a means to sort of look at what we want to be working on going ahead. So before we switch across to the chart, here's a bit of homework for you. I always like to leave you with a little bit of homework, something you can take away, you can work out to embed the skills you've learned today and make yourself better. So if you're a swing trader, take a little look at your recent trades, okay? Just, hopefully you've been doing step 8 and keeping good records. This is step 9, reviewing. Take a little look at your most recent swing trades. And also have a look, what was the monthly chart like from that time, from the month before? Did the price action on the monthly chart offer some insight into the likely direction that your instrument and trade was likely to take that month? Maybe it didn't, and that's okay, but maybe it did, okay? Maybe it did, maybe that it already got a bias from some of the price action on the monthly chart that may have just helped you, okay, in terms of deciphering the bias and the trend, and also, a way and a mean to engage with that. Would it have helped you to have been able to identify that higher time frame support resistance and also the bias and the trend? Would it have helped you? I'd suggest it probably would, but it's easier for you to look at your own charts and identify where and how that particularly could actually help. And also, could you build a trade plan around a higher time frame analysis and the lower time frame execution? Georgia says, as always, mastering a fantastic call. Many thanks. You're very welcome, George. We're not finished. We're going to go to the live charts in on a bit in a moment, and it's actually happening. So Darshan says, Paul, isn't foresight a great thing? Often most of us cannot sit through a big move, not knowing it's coming. We may exit great trade a fair bit sooner than warranted. Yeah, you're absolutely right, Darshan. It's always easier in hindsight. Trading is always easier in hindsight, okay? But this is what we're hoping here, is that, just doing a little bit of work at the start of the month, just to see what the last monthly candle was like and how it formed, might just give us a hint of where there's a possible bias or trend going forward. And that allows us to basically focus our time and resources, more effectively into looking for the individual instruments that might give us an idea for a lower time frame entry. That trade, okay, that trade, so long as it has an asymmetric reward to risk. So, if you're going to risk 100 pips, you want to be able to make 200, 300, 400 is fabulous. But you're absolutely right. It is sometimes, it's always easy in hindsight to sit and look at a trade and say, well, do you know what? That trade went 1,000 points. I could have had all of that. The reality is, you don't know. It's that old thing of woulda, coulda, shoulda. All right. It's always easy in hindsight. All you just need to be able to do is, well, can I generate asymmetric reward to risk? Does this idea provide asymmetric reward to risk? Is it a 2-to-1 trade, maybe 3-to-1, maybe 4-to-1? Okay. If you can do that, well, then what it does after you exit, well, that's, you don't know. Nobody knows that. Okay. Nobody knows that. The important thing is just do your trade process and have an asymmetric reward to risk to put yourself in a good place. But good comment there, Darshan. Thank you for that. So before we switch across to the charts, just remember to conclude, okay, as this is the final one of our sessions, is that, price action analysis, it's been a way of analyzing markets just using price movement over time. And what we are always looking for is we're looking for price action triggers at significant prices, levels, or zones. And it's from that which we can start to build ourselves a simple price action trading plan. Sometimes people are intimidated by monthly charts, all right, or they find that they're too large, that they don't believe they can trade them utilizing just standard risk management. However, they can be useful indicators of a likely future direction for the coming month, okay, for certain price action setups. And by understanding, okay, that good price action analysis, right, we can start to use monthly candles to help us with lower time frame trend trades. That's what we can look at and utilize. So why don't we have a little look at that on live markets in particular? We'll have a little look at the dollar. But, before I switch to the charts, if you've got any comments or questions, by all means, please, send them through to the details here. As I said, the important thing is that all of these sessions are recorded and all of them will be on the Admirals YouTube channel. And what we can also find, as I said, is you'll probably get a feedback form at the end of this session. Just take a moment to put that in, and we'd really appreciate that. So let's switch across to the charts for the last couple of minutes, okay? So just bear with us for a moment and we'll switch across. Here we go. Bang. So I am hoping that you can still hear me. I'm hoping that you can still see me. All right. So if you remember, just a few slides back, I brought up the monthly candle of the dollar index, which was here, this one in July. Okay. It's just that the chart here on the platform is not great. That's why we looked at that. But remember what I said. Just look at that. Just remember that we had that pin bar, okay, that although it was a bullish close, it was a bullish pin bar because the wick was beneath it. We had a false breakout, and it was giving us an indication that there's a good chance that there might be dollar bullishness coming into that market, which is actually what we have seen. But what I wanted to recognize is that sometimes, especially with things like dollar, you can see the correlation. It might only be once a year that you get a correlated move and an idea that can just give you more confidence and strength in terms of understanding, right, where is the likely move. So if I start here, and this is a profile here that I've got, which just covers the dollar. Remember, let's just draw this in here. Okay, we had here on the dollar index. Okay, we had pushed down to the 100, and now we were launching ourselves up, clearing away from it. Okay, so just remember that, because if we look at the exact same month on, for example, the Australian dollar against the US dollar, well, what did we have here? We've had, a bearish pin bar, not only a bearish pin bar, but also it was an inside bar. Remember how I said I liked inside bars, pin bars, smaller bars. What can we see here? What's happened for the last few months? Bosh. Okay. Bosh. There we had it. There we had basically Aussie weakness, dollar strength. So we had an idea that basically we were likely to have that kind of move, give us that sort of opportunity and the ways and means to be able to sort of enter that, okay, on the sort of shorter time frames. So that was the Aussie dollar. We also had it on the euro against the US dollar, which we should do because the dollar index is highly inversely correlated. But here we go. So remember that kind of July. What did we have? Well, not only that, we had, okay, buying a bearish pin bar. I know it closed bullish, but this is by the nature, it's a bearish rejection candle, bearish pin bar off the, basically we went between about 110 and 112 off the 50 period moving average. And what have we seen there? Bosh, we can see that has basically played its way through there. It's drifted down since there. That's on the weekly chart. You can see that has just been one-way traffic, okay? Absolute one-way traffic on there. So you've got the candle on the dollar index, and it's being confirmed by the Aussie dollar, the euro dollar. We also had the pound against the US dollar here. Price pushed up to 130 in July and then basically fell back, closed beneath couldn't get above the 50, couldn't get above 30. It was a false breakout. And then what have we seen? Okay, we've pushed our way down, and I suspect we'll go to 120. Okay, if we look at that in the weekly chart, that was it on the weekly chart. It was kind of a weekly inside bar, twin towers, followed by the move down, okay, and being able to basically short sterling against the US dollar. We also had it on the New Zealand dollar as well, okay. The New Zealand dollar, the same month, okay. We had price push up, okay, fall back off the 20 and bounce it, and then we've had a drift away down from there on that monthly chart. So what I just wanted to show there to finish off is that, especially when things like dollar index, etc., you can find and see that when you'll get maybe once a year where you'll get that kind of correlated move, that is giving you a great indication, okay, of where the likely move is, okay, for the next couple of months. And you can utilize that to position yourself accordingly on lower time frames, down onto the weekly, the daily, and perhaps even the 4 hourly as well. That gives you a great opportunity. So, as I said, just being able to do a bit of analysis start of the month, looking at your normal normal instruments, okay? Just do the analysis, and what might happen is every couple of months you might just get an opportunity that the market is telling you where its highest probability move will be for that next month, and that allows us the opportunity to position ourselves accordingly and take it into a great trading opportunity. Okay, there, ladies and gentlemen. So we have run out of time as always. Not only have we run out of time today, but we have run out of time for Paul's Price Action Trading Guide series. So I just wanted to say that it has been fantastic to be able to present to you on price action. I hope that you have found these series useful and helpful to you in your own trading journey. All of these will be available on the Admirals YouTube on the Trading Spotlight under the Trading Spotlight banner there. And as always, I wish you the very, very best of success in your own trading for the future. I hope that you'll be able to sort of embed some of these price action concepts that we've shared with you over the last pretty much over the last year. And as always, okay, just make sure that you are managing risk, okay, and that you are following a good process. And I look forward to hearing about your trading success across social medias these days. Okay, trade well, everybody, and enjoy the rest of the trading week. Cheers.